Good morning, good afternoon, everyone. Welcome to our Foundation Software Technology Forum, where we'll be discussing work in progress reporting. We're going to go through a roadmap for you guys on how to train your project managers with WIP. So hope everybody's doing well. Thank you, CFMA, for allowing us to do this for our customers. We really appreciate you. It's such a great organization. I'm really grateful and thankful that I'm here and working with you guys today. Hope everybody's enjoying their summer. I know I am. But anyway, so we're going to get started. I just want to go through a couple of things before we get into the training, but we will do mostly training today. We at Foundation really believe in educating our clients and making sure they have all the information that they need. So that being said, but we do have some other things that I just want to, if those of you who are not familiar with Foundation, so you know who we are. We basically are a fully integrated accounting and project management software company. We also have recently acquired McCormick Systems, which is super exciting, which is an estimating software. We also have several different mobile solutions, if you're interested in that, that can help with your operations. We have mobile time cards where the guys can enter time cards from their phones or from a computer remotely. We also have service dispatch where they can go in and take service tickets through a mobile device, as well as project management. We also have a program called eAccess, which is probably one of my favorite programs. It's very easy to set up. It's very inexpensive. And what that's used for is so that the employees can get their paycheck stubs themselves remotely online. So basically they just get an email and they can log into a website and print their own check stubs, look at their PTO. It's a really easy program that is useful for you guys if you have a lot of employees and don't want to have to do that all the time. We also have two different types of ways you can access our program. You can purchase our software, purchase license to our software and have it on your server. And you can also do our hosted version, which is where you would log in through like a remote application and access it anywhere in the world. So you have different ways you can log in with it. And then we also, I think one of the reasons that Foundation is number one is really our importing and exporting capabilities. So if you are trying to link up with other programs or streamline your processes and procedures, we do easily import and export data out of our program. So it makes it really versatile when you're trying to really integrate your software systems. And we also have another company that is part of us, which is Payroll for Construction. So if you're looking to outsource your payroll, you know, we can do that for you. We have different levels of that you can access. We have the ability just to do your taxes if you want that as an option, or if you wanted us to go in and actually print the checks and send them out for you, we can do that as well. Personally, I think that what sets Foundation apart is not only just our software, but our management team. We have a really good management team. We take really good care of our customers. I believe we have like a 95% customer retention, which is kind of unheard of in this industry. So we really do care about you guys. They do listen to the clients and just really have an understanding of what you guys need and are constantly improving the products. So, and if you have more information, you need more information or looking for more insight on that, you can always check out our website at foundationsoft.com and reach out to sales, and they can give you demonstrations or talk to you about any of those options I just went through if you are interested. For those of you that already use Foundation, welcome. I hope you get something out of today if you've not been in any of my classes. I've been in construction for 25 years. I've had my own construction business with my husband. I have unique insight from that, which I'm going to share with you today. And I've actually been at Foundation for 10 years, but it's been such a wonderful company to work for, and such a great team of people that, you know, have been there for years and years, that are here to help you guys with whatever you need. So that being said, so one of the things that I really wanted to talk about in this forum with the CFMA members was kind of what I've learned over the years. I've been teaching WIP for so many years. I don't know how many times I've taught it to project managers, and I've found certain ways to communicate about it that I find very effective. I've done webinars that, you know, you can access if you want more information on anything I'm going through today. Today's going to be more of an abbreviated discussion, but I hope to give you some good insight on it. But one of the things that I think I've learned in being in construction and having a company is really, it is like being in a war. Construction is like a battle zone. You have lots of moving parts and pieces. There's massive amounts of energy, strength, strategy, planning that goes into a construction project. There's different terrains. You have, you can suffer like crushing defeats in construction and also have wild success. So one of the things that I thought I would do today is kind of correlate what I'm teaching to this book, which is written, it's called The Art of War. It's actually a required reading in a lot of the construction management degree programs. But this book has just a lot of insight on being in a war, and I'm going to try to correlate that back into the training today with the WIP for you guys. But basically, the goal of the project managers is to effectively run the job for the best profit, to get it done as fast as they can. And they have a lot of parts and pieces and that are very difficult to get around, especially in today's market. A lot of the companies I'm working with now are having a hard time getting materials. They can't even get timelines on the materials. There's a lot of unfulfilled expectations, a lot of unhappy customers. There's a lot of compromise that's going on right now with the jobs that are already under construction. I've had companies had to go back and renegotiate contracts because of pricing going up so much. And so it's something that, you know, we really, as accountants, it does affect us in a way because it's affecting our team. So the guys that are the project managers are really out there on the front line. And what I've noticed, you know, one of the things in having my own business with it and having to do it myself, I noticed that after I left that and started working at Foundation and working with a lot of clients, I realized that pretty much every customer, almost every customer, has the same kind of issues with the project managers and getting the information that they need from them. So it's kind of like when you buy a car and you have that car and then you go and then you automatically like notice that car everywhere on the road. That's how it felt for me from going from my own business then into your guys' businesses and seeing the same thing. I started to notice this is a pattern. And I've taught a few webinars at Foundation and talked about that, but one of the things that I noticed, or you know, is that, and so we did surveys, and I think it was about 65 to 70% of you agreed that you had the same kind of issue with getting the WIP done, you know, because part of the WIP is their input and part of the WIP is our input. So it really is a team effort to get it done. So that being said, one of the quotes from that book, Art of War, it says, "He who wishes to fight must first count the cost." I found that to be very applicable to construction. The thing about WIP is that it allows contractors to basically, I mean, you're going to do WIP every month. The bonding companies want you to do it every month. Do you have to do it every month? No, but you should, because it really does give you some indications on the health of your jobs and your business. And the whole idea of being a contractor is that you are able to reasonably and reliably estimate costs. And if you weren't doing that, you would be on a T&M basis, and T&M contractors don't need WIP because they're not basing it that way. But most of you are, especially the big guys. Most of you are absolutely WIPing your jobs and performing WIP. So in doing that, you really have to be able to accurately and effectively estimate the cost. So that's a number one with WIP. Now, the WIP basically is looking at what you've billed versus what you've earned and telling you what the delta is there, and then you would adjust your financials based on that. But what happens in construction is, I think I've seen this enough, where the guys are either not doing, not updating their estimated costs, they're not getting their change orders entered, they don't really understand WIP and don't understand why they're doing it in some cases. So I'm going to go through that today because I think that's part of the problem. I think it's part of it, just that like their sheer lack of understanding of what it does. With WIP, the banks and bonding companies require WIP because if they're going to give you a credit line, or they're going to ensure your performance on a job, they want to make sure that you're not a high risk. And one of the things is, if you are, really underbilled on the job, that's going to create cash flow problems, and cash flow can kill a company. If you don't have the money to pay your bills, you're not billing enough, that's a big deal. So that's one thing it will look at. And then the overbillings are also kind of an indicator of if you guys are, if your cash balance is not more than what you're overbilled, that's a big red flag that you're taking money out of the business, because you might have all this cash and you're going out and buying boats and stuff that you shouldn't be, because you're basically borrowing money from future jobs to pay for current expenses. So they'll be able to see that, and that's why they want you also to do the WIP. But as a contractor, it also, or as a project manager, the WIP can provide great insight, to help you look at your jobs to see if you missed a change order, if something's not in there that it needs to be in there, or if you need to bill something. It gives you all that information. So I think just spending a little time with them and having them understand it is really key. And in doing that, I think that you have to look at it that these guys, I guess, working in construction, I've seen it over and over where they're kind of their attitude is, I don't have time for this. I don't have time for this. They're in the war. They're fighting a war, and you're coming over to them and basically pouring salt on a wound because you're coming over and you're saying, you know, where's the change orders on this job? And the guys are like, you know, like they're having a tough time with the customer. They might have 100 pending change orders and parts and pieces moving, and they can't get materials. And here you are, like, you know, where is this? So one of the things I think we can do better as accountants is not cut them slack, but understand that when we are coming at them with the WIP, that you might be like pushing some buttons. The other thing is all they do is argue about money all day long. So they're already like ready to argue about money all the time. That's what they do. So that's another thing. So when you are going at this with them, you want to make sure that like you understand you might, you know, want to poke the bear, right? So there's another quote from the book that I say, applies to this. And it says, rouse him and learn the principle of his inactivity or activity. Force him to reveal himself and to find his vulnerable spots. So understand that, you know, you might be rousing him, and then the WIP will reveal his vulnerable spots. It'll reveal where he's got issues. So getting their buy-in is super important, and getting the project managers to really do what you're asking them to do takes a lot of strategy, I think, in some cases. Not all of them. Some guys are really good about it. They've been doing it for years, have no problem with it. But even with the new revenue rec rules, I think really what it boils down to is, you know, if you know something is going to cost more or less, you need to update the software and let it know. I joke and say, you know, if we had the psychic module, you know, you wouldn't have to do that, but we don't have the psychic module, not yet. But you can teach them how to do WIP in a way where they don't have to really look at every job in its entirety every month. All they have to really do is put what changed in there. So look at the job and say, oh, you know, we estimated, you know, 50,000 for electrical on this, and the sub said he would do it for 45. Okay, go in and do a negative estimated change order for $5,000 so that we can update the software and make it correct, make it accurate. So those are the little things that we're going to talk about today with regard to the WIP. I'm going to show you kind of how I teach it with the project managers, and hopefully give you a little bit of tools that you can go back and take back with them and sit with them in a different way so that they're able to hear you and do what you need. Another good quote from the book, it says, treat your men as you would your own beloved sons, and they will follow you to the hills, into the deepest valleys. Another quote from this book. It's true. You know, you're going to get more bees with honey. So coming at them about it in a way that you're actually helping them and teaching them how the report can help them, I think is a good tact with them, because a lot of them really just, it's not their thing. So that being said, I'm going to open up a WIP report here on our software, and we're just going to talk about it a little bit. So if you come in to, Foundation actually has two different ways to do. We have an over under billing report here that is what I call our canned WIP report, which if you're using that report and that method, that works, it's fine. It's a little different from doing a custom WIP in here. And the difference really is on the side of the journal entry. If you use this report, the over under billing report in here, Foundation, you can post the journal entry in there, and it will basically take the difference between the last time you posted a WIP entry and this WIP entry, and then it posts the difference, or the delta, as I'll say. If you do a custom WIP in here, which I prefer because every company I go into has the WIP is the same, but some of them have different things that they want on it in different ways they want it. So you always gravitate towards doing it this way. I call it Melissa's way, but really it's just, you can do it either way. It's the same result, the same end result on the financial. There's no difference other than how it operates. So if you use a custom WIP out of here, you know, it doesn't post the journal entry automatically for you, but you can go in and post like an accrual journal where you would post it to the end of the month and it would automatically reverse out the first day of the next month. So that is a different, but the end result is the same because the month prior would have had the other entry in, and the delta between the two is still the difference, and that's still the same. So different strokes for different folks, but it works the same way no matter how, you know, how you decide to do it. I'm going to go in today as if you were customizing one, and I can actually give you guys this custom WIP if you are interested in it. We have it in our, you know, our repertoire of custom reports, and would happily give it out to you if you wanted it. But if you come to the Data Genie reports, the JC activity is where I've got my WIP. And typically with WIP, I tell people that you only want this for active jobs. You're not going to do any of these other jobs. So you want to make sure you exclude those. And typically you can exclude service and site jobs. So that's just, you don't need to put the T&M jobs on there. Sometimes people do, and sometimes people want them. And if you want them, we can do that too. We would just want to make a formula for those because they don't have contract amounts and they don't have budgets. So we would make a formula that says, all right, if the contract amount is 0, then use the billings, and if the costs or the budget is 0, then use the cost, which would make it like work out on the WIP, which basically, if they're the same, there's no over under billing adjustment. So it is in fact like excluding them. So again, it's the same thing, but different companies, you know, are used to doing it a certain way and want to continue to do it that way, and it's fine. So you have those options. But the thing with the WIP is it is typically a to-date report. So it's pulling everything job to date based on contract amount. Take a look at it here. I just have it filtered down because I have a lot of jobs in here. I just want to show you a couple so it looks better on the screen. But typically you wouldn't have to filter that down. But in here, this is just listing out my jobs. I show you on, if you do have the course materials, I did do some course materials for you today, so you don't have to take 1,000 notes. But on page 3, I just have a kind of a view of the screen. And columns A and B are what I call the project manager's responsibility. There's no way that we can do this WIP without them. We have to get their insight and their input into what the contract amount is and what the budget or revised estimate is. I use those terms interchangeably. The billings and the costs, that's our sandbox. That's our job. We have to make sure we've got everything billed and all the costs are in there. But they really have to tell us, you know, what the costs are and what the estimates are in order for this report to work. So this entire report, the way I look at it is it's so overwhelming. Like if you're not used to WIP or you're just starting out doing WIP, it's scary. It's, you know, there's just a lot of information on here, but really there's only 4 things that go into this report, and it's the contract amount, the estimate, the cost, and the billings. Everything else is a formula. And so if those 4 things aren't right, this report is not right. The way we do the journal entry to affect the period costs won't be right. Potentially what we would pay taxes on might not be right if we don't have this information in here, right? So that's one of the conversations that we really need to talk with the project managers about. Explain to them the importance of it and how it works. One way that I've found to do that is I just isolate one job for them. So you can actually filter your WIP out by project manager. So they're just looking at their jobs in here. You know, you can come in and say, I want to filter it, you know, by project manager and just look at, you know, a certain project manager's jobs and just do that, you know, and you can just look at their jobs. I'm not going to do that though. I'm going to do it by job. And I'm going to just go back to where I was. But I do want to tell you, you can do that with them. But one of the things that I do, isolate a job. Sorry, I need to do job number. And I'll look at the WIP. One of the things I look at is the percent complete. So this whole entire report is based on the percent complete. It's based on columns H divided by B. So your cost divided by your estimated cost. At the end of the job, it should be 100% and they should match, okay? 100%, so that 1.00, that job's 100%, but my billings, or I'm sorry, my estimate and my costs are the same. So at the end of the job, that's what it has to be. So what I will tell the project managers is, look, it's not that we don't care what the costs are. We do. We want to do it and get the most profit and eat the world. But for WIP, we really don't care in the sense that at the end of the job, it's got to match anyway. So what's more important is that they're adjusting to that number and get as close to it as they can. But by the end of the job, all the profit's going to get recognized and it's going to WIP properly and we'll close the job out and move on. So in other words, there's no really way to quote unquote avoid the taxes, but what would happen with the WIP is you're making it right in time. And so if they don't have the, if they're looking at this WIP, like this one job here, you can see the third one down, City of Phoenix Light Rail. It's 116% complete. Well, you can't be 116% complete on a job. So there's something wrong with that. So as an accountant, I would sit with the project manager and say, look, this report is really managing you. It's helping us to manage you, but it's really managing them. So, and I say, look, if you want to go under the radar, all you have to do is understand what it's doing. So this is saying it's 116% complete. It's not, but the reason it's saying that is because my costs are $918,000 and my estimate is $793,000. So they should, at the end of the job, match, right? So I have a change order or something, either A, I'm doing really bad on this job, or I've got a change order in here that I forgot to put in, or because what happens is they'll move forward with work to get the job done on time, but they don't have the approved change order or haven't gotten it negotiated with the owner yet. And so what I recommend to the project managers is like, look, if you know that stuff is happening, go in and put it in as estimated, an estimated change order to have the status be estimated or pending. And then once you know that you're starting to do work on that, you can put it in there as estimated, and then if it's pending, you can turn it to estimated. So estimated change orders will add to this WIP. Pending will not be on the WIP, typically. Now, you can include pending change orders on the WIP if you want. Foundation will allow you to. It's very customizable in that way. Same thing with internal change orders. But our standard, like canned ones, do not. They just include approved change orders and estimated change orders. So approved change orders would be something that the owner or the customer agreed to or signed off on. And an estimated change order would be what I would refer to as an estimate adjustment or a budget adjustment, where the project managers go in and say, hey, we're going to have more costs on this job. So what I do with them is I'll say, all right, let's just look at this one job, because I think looking at all the jobs is a little much. So I'll just filter this down and look at one job with them when I'm training the project managers. So I encourage you guys to do this too. Just look at the one job and they can see and say, all right, let's look at the numbers. So we have a $1.2 million contract. We've got a budget of $793,000. but our percent complete's off, right? And then what happens with this report is the whole thing is looking at the over under billing. So it's saying we're underbilled 94,000, which is wrong because the revised estimate's wrong. Because what happens is it takes the cost divided by the estimate to come up with that percent complete. And then the earned income is saying it's taking the contract times the percent complete. So it's saying you earned 1.4 million. Well, that's not true. There's only a contract of 1.2. So, and you billed 1.3. So it's saying you're underbilled by 94,000, but you're really not. So this is wrong. And what I'll say to the project manager is I'll say, okay, now if I were just to do the journal entry on this job and just file my taxes on this job, just this one job, what that entry would be is it would hit my underbillings, which is an asset, which is a debit. The offset to that would be a credit to revenue. And that credit, a credit to revenue, increases revenue. So I would effectively be paying taxes on $94,000 that I maybe shouldn't be. And so if it is at the end of the year when they're getting ready to file taxes, that really does matter. So the end of year WIP is probably the most important WIP of the year, but they're still all really important because it's helping you manage the financial accuracy of your jobs. So I would look at this and I would say, all right, so what happened here? And he would say, we got these change orders. Usually it's something like that. Or we underbid something, or right now we can't get the materials and we had to pay more for it. Okay, well, let's go in and tell Foundation that. Okay, so what I would do at this point is just go in and do a change order. So I would look at this job and I would say, all right, so this cost to complete column basically tells me what the difference is between column B and H. So it's $125,000 difference. So I would say to him, all right, well, is it about $125,000 more in costs that you think that's going to be, or is there going to be more? He might say, well, I think there's actually going to be more. I think it's probably going to be about $200,000 based on my estimate. And say, all right, well, we can always change it because remember, at the end of the job, the revised estimate needs to match the cost. But this is a good way for us to just question, what are we missing? What's going on, right? So this cost to complete here, I would go in and do a change order. And, we may be in the middle of negotiating that with the customer, so it might not be approved yet, but I would definitely tell the project manager, it's okay, just go in and tell Foundation that, hey, I anticipate we're going to have 200,000 costs. I don't know who's going to pay for it, if it's going to be us or them, or if we're going to split it. But at that point, you can go in and add the income to it when you find out. But really with the new revenue rec, it's about putting in the information when you know it is happening. And if you've got costs already hitting this job, I'm going to tell you it is happening. So what I would do here is I would just go to my job cost area and I would go and enter a change order and I'd walk them through this. And I would say, all right, for that City of Phoenix, we're going to say as of, whatever date you're running it. And so if you're doing your 6/30 WIP, I would explain to him, look, if you knew this happened, on June 30th, we would want to put it into June because that's when you knew, or that's when those costs started coming in, or when you knew that was happening. And the status, it hasn't been approved yet, right? So we would go in and just say, we're going to do an estimated change order. And down here, I would just say, okay, we're going to do a change to the estimated cost. He thinks it's going to be 200,000 more. And we'll just say, we've got material supply issues. Okay. And then if he wants to, he can distribute this to sometimes people will set up one code for it, you know, call it WIP adjustments, or he can go in and say, you know what, it's going to be on the concrete that the cost went up, and I'm going to put it to this labor code because that's what's on my job, and I'm going to say $200,000 in costs. And you can also add units to it if you want, which would be hours as well. So we'll save that. And then it's saying, hey, do you want to do a purchase order to this change order? And I'm just going to hit cancel. We don't need to do that. But if you needed to go and then order the materials, it allows for that. Now, if I want to go back to my WIP report, I'm going to open my little windows here, come back in here, and I refresh it. Now the job shows that I'm 92% complete, which is probably more accurate based on his projections. And then it's saying, all right, you've got a contract at 1.2, you're 90% complete. You should be billing 1.140, but we overbilled that a little bit, 1.3. So we're overbilled 192,000. So totally changes the what happens to the income statement, right? So if before I was paying taxes on 95,000, that wasn't right. So what's that? At a 25, 30% margin, that's a lot of money. If you do that over hundreds of jobs, it's really a lot of money. But instead, this entry would do the opposite. Instead of adding 94,000 to the profit, it would take away 192 because that's where we're at on the job. So this adjustment really does make a difference, and it really does make a difference for the project managers to put the information in. So I just tell them, like, look, if you know, like this happened to my husband once. He had a job site, he was doing a TI in a building, and there was a water leak, and the water just destroyed all the drywall when they were doing the TI. So they had to basically redo all the drywall, and then all the computers that were in that suite all were destroyed as well, right? So computers really aren't our problem, but the drywall certainly was. And so what happens? So what I would say in that scenario is just tell foundation that there's going to be, you know, 50,000 more in costs to go and fix that problem. I'm not sure who's going to pay for it. If it's going to be, you know, my GL, their GL, we're going to split it, whatever the situation ends up being, but you need to go in and update the cost. Same thing if your guys do a really good job on a task and they do it in half the time because they're rock stars, go in and do a negative estimated change order for whatever amount that would be to make the cost match the budget. And you can do that across your cost codes and get an accurate understanding of WIP. So that is my way when I teach them, and I'm able to get good buy-in from them in doing that. It's an approach that I take that is more like a more mild approach to it, and I think having them understand how it affects the financials is important, and also that at the end it just needs to match. So if the sooner that we can get to that number, the better. The other thing that's kind of cool about it is if you're one of those companies that's always behind on doing your books or your taxes, the future is a great predictor. So I know we don't have the psychic module. I joke about that a lot. But if you're doing the 6/30 WIP and you're in September, run the WIP as of September and see what the total costs are. And that estimated cost really is an exact prediction of the future cost. So if you know in the future that the cost ended up being 1.5, hey, put it in the WIP as of 6/30 because it'll WIP it correctly, because it'll accurately calculate the percent complete and then where you are on the job. So there is benefits to kind of being late on your books because you are actually able to project better, but not all the surety and bonding companies will like that I said that. But it is what it is. There, some people get behind for whatever reasons, and it is nice to do that. So all I'm saying here is if you went like into the future out here and you move that date to 9/30 and you knew that there was more cost, it would show up here, and then you can look at what that number is, and you can increase it effectively. All right, so yeah, so really just encourage them how to look at it. The other thing I have them do is to look at WIP and see the billing. So they can always make sure before you guys get to them, say, look, I'm going to come at you if you're underbilled. If you have any underbillings on this report, I'm going to come at you and be like, where's the billing for this? Where's the billing for that? So that's another thing I'll do with them is I'll say, look, run your WIP, filter it for you. Look at your own jobs. And then once you look at your own jobs, anything that's underbilled, it just means it needs to be billed. So here's the billings. I got $1 million in billings, but I've earned 1.95. So if my budget's right, you got to first make sure the budgets are right before you do this. Then you'll bill enough. But I'm going to automatically ask you, where's the billings for these? So if you need to know as a project manager, which jobs do I need to bill or which ones haven't I billed yet? This is a great report for that. So telling them how they're being managed really, really helps with getting them to do what you want. So hopefully that insight helps you guys out a little bit. The next thing I'm going to go through is some of the pitfalls of WIP. So this is more geared towards you, not necessarily the project managers, but just to make sure you've got everything in there right. So the first thing I would like to address is the job setup, because when you're setting up the job and you go into it, I'm going to pull up that light rail job so we can take a look at it. Actually, I'll just pull up the job on the course materials here. So I'm on page 4 if you're following along. Okay. So this is the Midway Airport. This is where you would put in the original contract and the original estimated cost. So in Foundation, we have so many ways of doing things, which is really good because different companies definitely do things different ways. I would say most of you can pull the WIP the way I'm about to show you, but some of you might want to pull it from the detail. So what we can do is in our report, in that report I just showed you, I can say, you know what, I want to pull the information from the summary screen or from the detailed sum total budget, which is in here. Now, there's two things about that. So one of the things is you want them to match. You know, it will let you do different numbers there. And people say, well, why does it let us do that? Well, not every contractor budgets every job. So for the contractors that don't budget every job, you know, they don't really care about it. So it doesn't force you to. But you do want to make sure that those two numbers match, and you can tell down here if they don't. So that's number one. You know, depending on where you're pulling it from, you want to make sure those always match, no matter what anyway, so that your detailed reports tie out to your summary. This original contract and original estimated cost is coming from the front screen on the job. This here is the sum total of all these cost codes that we've got in here, all the breakdown of it. Okay, so that's the number one thing. The number two thing is these numbers here should never be revised contract amounts. Never, ever, ever, ever. You never should change those numbers once you put your original budget. If you need to change the original contract or the original estimated cost, use the change order module. Because if you change it here, your WIP won't be right, what I call in time. So if you want your WIP to be correct in time, you need to have the original contract be the original contract and the original budget be the original budget. And then the change order module is the one that looks at the different dates, okay? Because this screen right here isn't date sensitive. So if you just go in here and change it, it's not going to be right in time. So that's one thing that, you know, you want to make sure that you're doing. And then if you are building reports in here, I want you to know that you can tell Foundation to pull from this screen or from the detail. All right, so that is totally up to you, and different contractors do it different ways, but I think doing it on the header or on the screen is the easiest way. And I would say out of the 1,000 companies I've worked with, 999 do it that way. Very, very rarely do I see anyone pulling it from the detail. It's just too much, because then you have to edit it in the detail, and sometimes, you know, they don't have time for that. Those guys are in a war. They don't have time to go in every little code and put all the changes, but they can go in and put what the total is and put it to a code. And you want to make it easy for them so it's accurate, so you get your financials done, and not make it so grueling on them that they have to go through every single cost code. So that's number one. The next thing that you'd want to look at are, you know, I know with Revenue Rec ASC 606, like one of the things they want you to do is, like, if you know that there's liquidated damages on the job, and you know that you're not going to make schedule, and you're going to anticipate those, you know, you'll want to go in and do a change order for that. If you have performance bonuses that you are going to finish the job on time, you're going to get a bonus for it, which is the other way. Go in and put a change order for it. Even though it hasn't happened yet, if it's looking that way, put it in, because that'll make the WIP numbers all come out correctly. When you're doing change orders, make sure that the dates that they understand, you know, the dates on these really will affect WIP in time. So any changes that they have going on, you know, you want to make sure they do it. And then you have your statuses. So typically with our canned, you know, and custom, we have canned ones, and then we have customized canned ones. Our customized canned ones always include approved and estimated change orders. So I try to tell people, use the estimated change orders as quote unquote internal. But, you know, if you don't, it's not the end of the world. You just go in and you have to edit the formulas and the reports. But make sure that the project manager and you guys in your companies understand what each of those do and what's included on the WIP and what's not, so that you're putting it into the right place. The change to the contract here would be, you know, if the owner is going to pay for the change order. If they're not, you can leave it blank. So that's why this one has, you know, it's just a bad job. Our costs were 227 more. You know, it can do that. Now this is pending, so it's not showing up on my WIP, right? So I just put that in there like, I think that's going to happen. But then we just went in and actually put, it was about 200,000, right? So you have ways of doing that. And so if they know it and they know something's coming up, if they go in and put a pending in there, it's nice for them, because then they can look and say, oh, I forgot to get that approved. Because the other thing that I see out there is when I see the accountants just going in and making these adjustments for them, that is also very dangerous, because there may be change orders out there that you're not seeing or don't know about, that if you do it for them and just close it out, you're never going to see that money. So I would really put this into their capable hands and explain the importance of it. So that original estimated cost, so the other thing is with that on here on the job is some people will make this the same number as that. Don't do that. Again, the estimated cost and the actual cost are a formula. And so you're never going to have profit cost hit the job. So it won't be right. You'll always, if you do that, you'll always be underbilled and it'll throw off your financials. So this number here, the estimated costs, really should not include profit. That should just, it literally is the cost that hits the job, all right? Not the money you get to keep from doing the job. So you never want to include that in there. I'm on page 5 if you're following along with me. So on the cost to date, I will say what you want to look for there. And before you hand out the WIP on the cost here, I usually will tell the accountants to check to make sure all the bank accounts have been reconciled, because you would maybe catch something there that isn't in there in the cost. Is everything posted? So like you might have entered invoices but not posted them. So you can include unposted invoices on this report, but I would make sure they get posted before you run your WIP. And then the other thing, I talked about this last year when we did this event, was the overhead allocation. It's probably this is my second favorite topic. I think overhead allocation is definitely my first favorite topic to teach. But the overhead allocation, for those of you that weren't there last year, is basically where foundation can go in and look at all of your indirect expenses based on your job costs, and then automatically do a journal entry with your input that puts those costs to the jobs and offsets a credit into your indirects, so that it basically moves all those indirects back to the job. So you'll want to make sure that is done before you hand out the WIP, because that's going to increase the costs, which, you know, if you're not budgeting those costs and now what you're using foundation and now you're going to want to do a WIP adjustment for that, right? And then eventually go in and start putting it in when you get the job, as opposed to doing it with WIP adjustment. But those are things that you'll want to look for on the cost side. And then really just on the billing side, you want to just look, is everything posted? You want to look at the under billing column here, column G, and that's going to give you an indication of what needs to be billed. The people that I see that use, I'll just mention this, that use the T&M, that have T&M jobs, I see them having a hard time with that, because the WIP, if they have the T&M on the WIP, it doesn't really show the way that they need to be able to see what hasn't been billed. So usually what I do with them is build them a little report that shows them all the jobs, and the jobs that have costs but no billings, or costs, you know, if the costs are more or greater than the billings for any period, and then they can run that and see which jobs need to be billed. So I'll say that the underbillings this column here is great to manage the billings for your work in progress jobs, but for your T&M, you're going to want to look at a different report for certain. So definitely review the percent completes on the jobs when you're going through, making sure they're right, looking for those overages if you see them. It's not going to tell you everything's wrong, but really you want them to make sure, like, are all the change orders in? Is the contract amount right? Is the estimated cost correct? That is number one, the most important thing that you want to do. And then let's see here. The dates on the change orders. Again, I've talked about that, but that's super important. So that affects the WIP in time. So we want to make sure that they're doing that. And then the other thing that I will say with WIP, just in general, is you can run this report also as a completed contract schedule, which is kind of cool. So a lot of the bonding companies and whatnot will look at that and need that. So you can run this report. You can come in and just say, all right, I just want to look at my closed jobs that were closed between, you know, a certain date. I'm just going to put a large date range in here. And then it'll show you all the closed jobs. So this, you know, basically could be your completed contract schedule as well. So one other thing before we go over to questions that I want to make sure you guys are privy to is you can use Excel with the WIP. So foundation, we would be elated to help you with this if you need. a couple hours of consulting and you can get a custom WIP report here. This would be like a sample of it. So I know the people say, you know, you don't want to build reports in Excel and yada, yada, yada. But I will tell you that everybody I give this to loves it. And we could load this in your program in 5 minutes and then customize it exactly the way you want, in the order that you want, with the fields that you want on it. And all you would have to do is put the date and hit refresh. And it goes and it updates the software based on the data that's in there. Super useful, super cool. You can meet with the PMs. You can filter it out by them. We could do custom filters. You can add what are called slicers in here. So let me just pull this down a little bit so I can see it, because this menu's in the way. Let's see. Okay, so yeah, so let's make this a little bit bigger. But slicers, if you guys don't know, and we teach classes, we teach you how to build these yourself if you want the information and you want to learn how to build these. They're super exciting. And then we have, you know, a ton of consultants that are really good at Excel and build these macros and all kinds of things where they turn colors if certain things happen. But the slicers I always like to show you. So if you come here to insert a slicer, you know, these are visual filters. You can slice it any which way. You can slice it by project manager, or by status, or by customer, or however you want. But the slicers just do like little buttons, so where you can just look at a certain project manager's jobs. You know, they're visual filters, or you can pick a bunch of them. Super useful. You can do this so easily. Like I said, this doesn't take very long at all to build. And if you're interested in a custom WIP and you are using Foundation, I would reach out to Julie George. She can get you set up with a consultant. But all you do is put the date and hit refresh. I remember one of my first construction jobs. We had like 1,000 jobs, and I had to go in and manually put all the data into the spreadsheet. So, and that was in Lotus like so long ago. But you don't have to do that anymore. All this is automated. I've had so many queries that we built over time. I had one company, a big company that had equipment. You know, they would test the oil on the equipment, and if the oil had like too much iron or too much carbon, like we put that data into the equipment ticket in Foundation, and then put the measurements. And then they were like, "Can you graph this?" I'm like, "Oh yeah, no problem." And we just put it in there, and they charted it, and they were able to tell which pieces of equipment were about to break before they broke. We should do that with our own blood, I think, but maybe we'll get there someday. But you can do that, all kinds of things in Excel. Another thing I'll do with Excel is pull all the data in there from the job records, and you can see if you're missing, you know, a payroll department, or you're missing a customer or a contract amount, or you can set up little custom fields like, did we receive the signed contract or not? Click yes. Okay, look at all the jobs we don't have a signed contract on. Let's address just those with the filters and the slicers. So you have so much capability. And then we can embed these into Foundation. So, you know, if you're like, well, I don't want to not use Foundation. It's not using, it is using Foundation, but, you know, we can load them into this custom area where, you know, you have an Excel form here, and we can just open up the custom WIP right from here. It'll open it up. So this one has the same name, but it'll open right from Foundation. So you have a lot of capabilities. I want you to know that you can do that with pretty much any software that's quote unquote ODBC compliant. So it stands for Open Database Connectivity. So that just allows us that we can grab the data out. And it's automated. You don't have to do anything. If you go in and change a contract amount and hit refresh, it updates in here. If any costs change through 6/30, it updates in here. And if there's anything else that you want to put on there, or calculate anything off to the side, one of our guys built something where you can put the estimated change order amounts, and boom, it'll create a file that imports the estimated change orders in for you. I mean, you want to improve your processes and procedures, there you go. And one of the things that I think really sets Foundation apart is our willingness and capability and knowledge to do that for you. So you are interested in that, definitely reach out. I think it's great because you know, sometimes your CPAs want this. You can just send them the file. It has all the data, you know, your bonding agent, and they might need to take that data and copy it into their spreadsheet. Whereas if you send them a PDF file, it doesn't help them as much because then they have to manually key it. So they'll be happier with you, the people that are working with you, if you have these capabilities. And then if you could think of like other things that you manually do, like your employee phone list, like if you have that manually in Excel, do a query class, learn how to get that, do it automatically, and then just refresh it as new employees come in, as they drop off. So easy to do, and it's fun. And you know, we teach classes on these. If you want to do it yourself, or if you want to hire us to do them, we certainly can do that as well. So I will leave this open now to questions. If you guys have any questions, Scott Odachowski with our company, he's going to go through and ask any questions that you might have, and I'll be happy to answer anything that you've got.
Hello there. So yeah, there were a couple of questions that people asked during the session that I told them that we would get to during this. So the first one was asking about reversing a WIP entry. Could you speak a little bit to that, Melissa?
You bet. So let me minimize this here. So it depends on how you are, you know, which method that you're using. But if you're using the custom WIP, what I would do is set up what's called an accrual journal. So in your general ledger maintenance, you can set up your own journals, and be really careful when you're setting up journals that you do them correctly. But like I have one in here called a WIP journal. Okay, so it has a distribution of job costs and GL. So that's the safest setting for any new journal that you make. Always set that, because then it'll look to the GL account settings. We do have other settings here that we use to fix things, but you typically want to shy away from those. But you would set the journal type as accrual. And if you set the journal type as accrual, what it will do is it'll, when you go to post the journal entry, it'll automatically ask you for a reversal date. So you can post it to say 6:30, and then you'll put a reversal date at 7/1. And when you post it, it posts both entries at the same time. But basically that just will go in and out. But if you're using our canned WIP, that one posts the delta between the two entries. So there's no need to do a reversal on that. So hopefully that answers your question.
I believe it does. So the next one was somebody who admittedly is new to WIPs, and she was asking, you know, assuming that all of the base data is correct, you know, what actionable data do you get out of the, you know, how should you react to a job that's over or underbilled?
Question. I would always, I mean, it depends on your particular company's policies and whatnot, but typically with like underbillings, you're billing on the 20th of the month through the end of the month. And so, you know, it would depend on like really when the customer is expecting the billing. But you always, like, if you kind of keep the WIP up to date as far as like when you know something has changed, you know, the cost and billings are what they are, and it's going to tell you if you're underbilled. So obviously you never want to be underbilled, but you're going to go through a period in which you will be up until you bill it. And so it really kind of depends on when you're, like the customer usually will drive the billing schedule from you. Like a lot of them needed it. Like, depends on if you're a sub or a GC, but you know, typically the subs are sending the billings into the GCs, and then they have to get approved. And then, and so it kind of depends, but it's more of like your internal, like how your customers work. I would ask the owner of the company that question, like how does he want you to proceed with that? And, you know, kind of explain that a little bit more. But hopefully that answers it a little bit.
All right, and the next one was asking about how the WIP journal actually affects the general ledger. So, you know, the overbilling hitting liability, underbilling hitting assets, so on and so forth.
Perfect. So what happens is on your income statement, it's going to hit both your income statement and your balance sheet. So at the end of the entry, it's going to have a total over under billings. Okay, so on the balance sheet, when you run it, you're going to have an under billings amount and an over billings amount. So the one thing is don't put the under billings in as a negative number, because it's a debit. So you would put the whole number in there, even though it might be negative on the WIP report. So you would book that there. And then down on the overbilling side, you would book whatever the total overbillings is on there. So if I were to look at this report here, it would be, sorry, I can't see it. It would be these two numbers at the bottom. So overbillings would be 23 million and underbillings are 2.3 million, right? So if I were to book that entry, I would hit those two accounts, right? And then the offset to that is the income statement. So if I go into my general ledger reports and go back to my income statement and I run it, and again, you're going to want to run it for whatever period it is. And that's why I say it does affect your profit, because this would be your over under billing adjustment. So that would be the delta or the difference between your over billings and under billings. So that would be like, if it was 23 million minus 2, it'd be like 20 million here, right? So that would offset in here, and that's either going to increase revenue or decrease it. And what it does is it's just adjusting it based on where you're at, because you really don't want to pay taxes on work that is not complete yet, and that's what it's doing. It's allowing you to pay taxes, not based on what you build, but based on where you are on the job. And that's all it does. So hopefully that answers your question, but that's where it ends up and how it works. So you would hit those three accounts.
All right, and the last question that is the last one that I've seen that I haven't been able to answer yet is how do we do a WIP by job? And since the WIP report is by job, I'm assuming the question means how do we get it to be posted by job? Okay.
So you can post it by job, but you don't really need to, quite honestly. If you wanted to, you would just, you would have to manually do it, or we could create a query that would pull it out and do it that way automatically for you. But typically it's not necessary, because that entry at the end is just kind of a total offset. So you don't actually have to do a journal entry for every single job. I know a lot of people that come from Timberline, or the old Timberline, or I don't even know what they call it anymore, but would do that. And we can do that. I mean, it's just a longer journal entry, as opposed to having, 3 numbers to put in. You would have to do one for each job. But I don't find it necessary, because, it goes in and goes out. So it's I think it actually confuses the project managers, because they're like, what is this? And having it on their job cost reports is not necessary. But if you want to do it, you can. It would just, you would have to build a little query you can contact our consulting team. We can help you with that.
And Danielle was saying that she really found this session helpful. Do you have any other upcoming sessions like this, or any other possible ways for them to hear more from you?
Oh, great. So actually, I've done, I don't know, probably 100 webinars that are on our website. So you can go in. I did all the webinars in the year 2018 and 19 for Foundations. So you can go in, and I did course materials for all of them. Pretty much all of our webinars are really good. But we have, you can buy the whole year, or you can pick and choose which ones. But I've done several webinars on WIP, overhead allocate. I mean, everything. My goal with doing the webinars was really to have you be able to self-study and learn and take the knowledge that I've gained over the years and be able to utilize it in your businesses. So you can just kind of go on our website and see what they are. We also offer a bunch of free webinars. There is one in particular. I can show you how to get there. If I can, let me stop share, and then I'll get on the website and show you where it is. But there's a couple free ones in there as well that you can get at, which are really cool. And then we did do free webinars on all of our base modules, so you can access those as well, which is so nice. That's not what I wanted. Sorry, I gotta get this here. Okay, so I am on our website. Let me get this shared here for you. Just give me 1 second while I share it. Okay. And I'll share that out for you. Okay. So if you come in here and you go to click on clients and you go to our client portal, and you'll have to have your login to get there. But if you come to education and you go to educational webinars, this is where all the webinars are. It's like in here. And then if you scroll down, you can view them. And you can get them through there. It's just taking a second. And then the free ones, which are probably the most important, but these are, you could go in and look at, you know, these are 2020, 2019. You can do a bundle, do both years plus the Excel webinars. I love teaching the Excel webinars, but here's a free one, which is really good for the accountants. It's called Period End Month End Closes. I go through everything that you want to look for when you're closing out a month or a year, including year end. So that's a free one that they just gave you. So I would start there. And then also, if you go into my account, my webinars, we give you a lot of free ones. You just have to kind of know to get there. So if you go into free webinars, see, when you come here, you can't really see it. But if you go to recorded free webinars and click on that button right here, you'll see. And the other thing Foundation does is they've partnered and done, you know, like document delays, you know, legal claims related to coronavirus. It's not just us. We hire other people to do these webinars as well. But all these overviews are, and again, they come with course materials, PowerPoints, everything on every module in the base package you get for free. So, and we do that just because we want you to be able to, when you hire someone, be able to just get them up to speed quickly. And we're firm believers in repetition, that you know, two ways you learn is through association and repetition. So we've offered these to you guys so that you can do them as many times. You can pause. A lot of times people do want to pause me, so I feel like it's a funny joke that you can stop me because sometimes I'll go on and on, which the clients know. But you can go in there and access any of those as well, and get pretty much, you know, whatever you need with it. So hopefully that answers your question.
And then a couple of things that I'm just going to want to add. Some of the most common questions that I've been seeing, I've been doing my best to respond to all of them, but can we get a copy of this webinar? The answer is that on the CMFA website, once I've had a chance to edit this, you will be able to find link to this webinar, and I expect that to be ready sometime in September. As far as the JC Activity custom WIP that Melissa was using, we will be sending that out to all of the attendees whose email addresses we have, probably in about a week or so. And if you are interested in getting some help creating an Excel report or getting a little bit more information about anything at all in Foundation, you can email Shannon Fisher at srf@foundationsoft.com, S as in Sam, R as in Rebecca, F as in Frank, SRF at foundationsoft.com. She will be able to set you up with a consultant like me who is able to help you with any aspect of the system or querying out of the system that you may need help with.
Perfect. Thank you, Scott. All right. So right before I let you guys go, I'm going to give you one more quote from the book. The supreme art of war is to subdue the enemy without fighting. So I'll leave you guys with that. Thank you. Thank you, everyone. You have a great day.